crypto industry is easy to move to the UK. So if the US screws this up, Coinbase will, sure, be a US listed company, but its main operations will be in the UK. Same for many of these businesses. And I think that's very, very interesting. Germany's already doing a good job with regulation. Switzerland's done a great job with regulation. France is trying to do a good job with regulation. France is pioneering Web3 via LVMH. Yeah, Bernard Arnault is the richest man in the world. Louis Vuitton Moet Hennessy is one of the biggest companies in the world. That's a fashion luxury goods. They've embraced Web3. All the Arnault kind of siblings are all involved. The kids, they're all involved in Web3. And I think we will see more of the fashion brands and more of the industry based out of that. Ledger itself is based in Paris. So,
if you're familiar with macro investing, you likely know Raoul Pal, a prominent cryptocurrency advocate who describes himself as irresponsibly long on the industry. However, in a recent interview, Pal raised concerns about the potential downfall of the U.S. crypto market due to mismanagement and regulatory shortcomings by the SEC and CFTC. Coinbase, a major crypto exchange, also recently released a video urging officials for regulatory clarity, warning that they may consider relocating to the UK if improvements aren't made. Despite this, Pal believes that the global rise of cryptocurrency is unstoppable and that the UK and other European countries with more favorable and transparent regulations will take advantage of regulatory arbitrage, attracting crypto innovation and capital to their borders. Pal predicts that the upcoming weeks of 2023 will serve as a crucial indicator of the cryptocurrency industry's direction.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
This is actually global liquidity. And now look at that fit. That fit is staggering. That fit is so good, you can't argue that there is not a very, very close ongoing relationship. And anybody who says, well, correlation is not causation, listen, you're missing the whole point. Tied in with global liquidity is equity markets. Now, when you say, oh, well, they print money and therefore money flows into stocks, is simply not provable by the volumes in stock markets. What actually happens is the Venezuelan situation where you debase the currency and the stock market automatically adjusts in price. And that's a phenomenon that you see when there's excess supply of money around. And you see it even in your neighborhood. You saw that houses didn't trade at this price, this price, this price. They went from here to here after the printing. That was the change of the valuation of house prices based on the redenomination of assets. So NASDAQ and global liquidity, now the GMI Global Liquidity Index is a combination of the G5 central bank balance sheets plus money supply and other measures. And it's staggeringly good. Now, so therefore, if this is the key driver of asset prices, then all we need to know is what's happening to liquidity. So the next chart reveals a bit more about it, which is the chart of the year-on-year rate of change of that global liquidity index. So Brian, if you could pull up the next chart. So you can see global liquidity came sharply lower. That brought all financial markets down. The NASDAQ, being highly correlated and a leverage play, came down more, and crypto, which is even more a leverage play on liquidity, plus the adoption curve, as is NASDAQ, because technology adoption is massive right now. They came down a lot, but as that turned, so did markets turn. And this is where people are scratching their heads. I don't believe it. The market should be going lower. Can't you see there's a recession coming? Oh my God, can't you see that earnings are coming lower? Yes, yes, yes. The market knows it all in advance, and it already is priced. Now, I've put that out many times, both on Twitter and here on Real Vision, that the markets are forward-looking, and there is this uptick in liquidity was actually forecast by our GMI indicator, our financial conditions indicator, back in March of last year, showing that we would start bottoming and coming up from this level. The economy will follow suit. We're probably in a recession now, and then we'll have the kind of final stages of the bottom of the cycle, and then it claws its way back up again and doesn't become positive, let's say, till the end of the year, where GDP growth is positive again, but we'll have unemployment staying very sticky and prices coming lower, etc. And again, I'm not going to go through my whole macro thesis here. This is a daily briefing and what's on my mind, and not my whole philosophy on life, the universe, and everything. But liquidity is picking up, markets picking up, and if liquidity picks up further, whether the banking situation changes, the regional banks are still on their knees So I still think that news flow gets worse and the Federal Reserve end up doing something. If not, the economy is going to get worse. The longer they keep rates up, the more probability is they have to cut rates rapidly later. The market picks this up. And so liquidity is driving everything. Watch the Mike Howell interview on Real Vision from, I think it was yesterday. Incredibly important interview. The final chart is just to show this correlation another way. This is the S&P 500 against the G5 central bank balance sheets. And this shows that this is a kind of a plot chart to show correlations. And we've got a correlation of 97%. So there is no argument liquidity is the key driver. You can argue against it. You may hate it, but it is what it is. So once you understand liquidity is everything, you stop worrying about all of the things that you think should work as a model. Liquidity drives everything, not your model, not valuations, not anything else. It's all irrelevant. And it took me a while to understand this or even believe in it, but now I've seen it, I can't unsee it. And that everything code I wrote in Global Macro Investor, which I won't be really sharing publicly for quite some time, I think is the real answer to all of this. So liquidity, that's what's driving markets. Liquidity, as we know from the Fed balance sheet and others, is not accelerating right now. We had an acceleration, the market's accelerated, it's now pausing, the markets are pausing, and this will go on. Now, there's a bit of variability around it in general. My view is the central bank balance sheet goes out to about 12 trillion in the US. That takes all assets with it over time. NASDAQ, crypto do better. The NASDAQ does well, crypto does ludicrously well, and that's how it always is with liquidity and these network adoption models. The S&P does fine. It does pretty much, I think the S&P does 2x what the balance sheet does in percent. So the balance sheet fell about 15%, and the stock market fell 30%. You know, it's that kind of relationship with the S&P. The NASDAQ's got a multiplier effect and crypto's got a multiplier effect on it, which is why I'm so bullish on those two right now based on my liquidity framework. Okay, what else on my mind? Crypto, obviously. Crypto's always on my mind. It's been doing phenomenally well based on liquidity. Bottomed exactly as we saw global M2 turning. That was my signal into that hellhole of June when Luna collapsed, and then the second hellhole of the FTX collapse, which ETH didn't take out the low. It bottomed in June, but Bitcoin and others bottomed in the October period, which I tweeted out about and talked about on Real Vision, which I thought was the low of the market. October is the bear market killer, and it seemed to have done its job this time around too. So I'm very positive overall. I'm positive on crypto, been positive on crypto all year. I was buying in June, I bought in October, I bought in January. And just looking down the list of how assets have performed this year, Bitcoin's up 80%, ETH up 75%, Solana up 156%, which was one of my key smaller bets. And then other markets that have done particularly well, carbon, which is another one of my bets, is up about 12%. And if I look at equity markets, S&P's up 8%, NASDAQ is up 20%, making to my point, my exponential age basket of more kind of growth end technology is up about 33%. So you can see the markets are already bifurcating. This is exactly what happened in 2019 after the Fed pivot in 2018. The Fed are going to pause very soon, or have paused. I think they probably pause or should certainly pause. And we'll see this continued acceleration until liquidity slows down at some point. And then we'll have pauses in the market. We may even have pullbacks if liquidity comes back somewhat, which I don't really see. And then we'll see acceleration as we start hitting the recession and the unemployment side of the equation, which comes later when the real money printing and rate cutting really starts. So that's crypto overall. Crypto regulations, we've seen Gary Gensler today, total shit show, being questioned about is Ether security, all of this stuff, refuses to say anything. You know, I think the questions asked were pretty right, is why can you not give guidance to people? Do you want to drive away innovation from the United States? And that is what I've been talking about for a while. I've talked about on Daily Briefing, I've talked about on Real Vision, I've talked about on Twitter, is I think the UK is almost uniquely positioned to take a lot of the crypto businesses. We saw Brian Armstrong from Coinbase over in the UK talking to the government, and that is not the only organization that's been over there. And you see, we've seen this before. England has one great trick. It has a incredible financial system, democracy, and they speak the English language. and they have great trade linkages with the entire world. So when the US stumbles, particularly in financial markets, the UK picks up the slack and does something called regulatory arbitrage. It happened really predominantly first when the US came off the gold standard and had capital controls, because they wanted to limit the flow of dollars in this new world. The foreign exchange markets became the new market in town, because before that everything was pegged to gold. And the UK captured that market, became the largest market the world had ever seen. Then the next phase was the US restricted bank lending, or lending to foreign counterparts. And the UK picked that up and developed something called the Eurodollar market, which you've heard from everybody from Jeff Snyder to myself talking about. The Eurodollar market is the offshore lending of dollars. It is the largest lending market on earth and is gigantic. Yeah, hundreds of trillions of dollars. The FX market trades trillions of dollars every day. And then after that came another little trick from the UK, which was they saw that the US bank regs didn't allow for the use of capital in derivatives in an efficient way. So it was impossible for US banks to get involved in derivative markets. So the UK changed their banking rules. And they changed their banking rules over something called Big Bang. The Europeans followed suit, and the entire derivative market outside of the futures market. So we're talking about the really big markets, the swaps, the OTC markets, all went to the UK, where the UK became the epicenter of everything. All the US banks at this stage, over the 90s and 2000s, after Big Bang, which was the deregulation of the banking industry in the UK, everybody moved to the UK to set up business. So Goldman's main office, London. JP Morgan's main office, London. Morgan Stanley's main office, London. Merrill's main office, London. Credit Suisse, London. SocGen, London. Paribas, London. HSBC, London. Everybody went to London because that was the center of the global financial markets. That changed after Brexit and changed after the Basel III agreements on regulatory use of capital within the banking system. But here we are again. There's a $1 trillion industry called crypto. It has been $3 trillion at peak. This is not a small industry. And most people project it to grow to, let's say, 10 trillion would be gold. Now, gold is based in London as well, regulatory arbitrage. And then if you look at other major asset markets, they're 100 trillion plus, and stuff like the derivative markets are like quadrillion dollars. So the UK is looking at this thinking, okay, we need a relevancy in this world. We lost most of it because of our divorce from Europe and then having to renegotiate trade agreements with every country in the world because we didn't have the European agreements, all of this, and also the loss of manufacturing in the UK and the loss of the financial industry. So here is the UK's gift, and the UK have taken it. The last 2 or 3 governments have said, we want to embrace crypto. And they're setting up their stall for very sensible regulations. One of the key ones is stablecoins. They say we want to be the center of stablecoins. Why? Stablecoins are just tokenized Eurodollars. Once you understand that, you understand how big stablecoins are. It's the Eurodollar system, but for individuals, because you can tokenize it. So it gives anybody access to dollars, whether you're in the Philippines, whether you're in India, or whether you're in the US. So it's a really, really interesting opportunity for them. And to be honest, they've done it before. And the crypto industry is easy to move to the UK. So if the US screws this up, Coinbase will, sure, be a US listed company, but its main operations will be in the UK. Same for many of these businesses. And I think that's very, very interesting. Germany's already doing a good job with regulation. Switzerland's done a great job with regulation. France is trying to do a good job with regulation. France is pioneering Web3 via LVMH. Yeah, Bernard Arnault is the richest man in the world. Louis Vuitton Moet Hennessy is one of the biggest companies in the world. That's a fashion luxury goods. They've embraced Web3. All the Arnault kind of siblings are all involved. The kids, they're all involved in Web3. And I think we will see more of the fashion brands and more of the industry based out of that. Ledger itself is based in Paris. So
for more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.